Hello, everyone. Joe Mass here, your Chief Investment Officer. Just wanted to give you a quick update here. It's December 4th, Friday the 4th. I just want to give you a quick recap. We'll shoot a video here at the end of the year to recap the whole year and what's coming up for 2021, but I just wanted to give you a couple quick remarks here. So one is, wow, November, a month to remember. The market was up about 10.75. Historically, it's up about 2% in November. And so it definitely had a great recovery, mainly because of the news of the vaccine. And so it is an abnormally high month, but we'll take it. And we're good to see that the market's coming back. We did reposition the portfolios this month. We did put money, cash back to work. And so we did participate in a lot of our equity on the upside, and we missed most of that September loss. So we're feeling pretty good about those moves. Another thing that we're looking at, it's time to go to the beach. The beach stocks are starting to pull up ahead of the stay-at-home stocks. The beach stocks, it's an acronym standing for bookings, entertainment, airlines, cruise casinos, and hotels. And so we're seeing some larger participation in the market, more what we call breadth in the market. So more companies are starting to participate. And a lot of that is, again, on hopes of some reopening and the vaccine. So we're seeing, you might start to hear some things about the beach stocks. Inflation's pretty tame. However, we like to present both sides of an argument. And so there are some reasons that we could see inflation go higher on the short term. And that's the pandemic drove a lot of prices down. So we had a big V race to the bottom, and now we're going to start racing back up. So as unemployment goes down and people get more money, they're spending more stimulus, that could put some pressures on prices, and it leads to inflation. Also, companies have not, there's a supply chain imbalance. They have not been stocking their inventory. And so if there's a lot of demand and there's not a lot of products on the shelves, that means there's more dollars chasing fewer products. It means we get inflation. Another reason is that the Federal Reserve has revised their policy stance. They're going to average 2%. They want to average or target 2% inflation. And so that means that in order to average 2, you have to have inflation that is both lower and higher than that average 2%. And so since we're at about 1.2 to 2%, we're expecting that 2.5% is a number on the above average, and so we could see a little bit of inflation. And then, of course, the more fiscal spending. So long term, I don't think the market is worried about inflation, but there are some reasons that we could see a little tick up in inflation. Bonds, there's some pressure building on the 10-year bond. The rates are, believe it or not, trying to get back up over to 1%. So as bond prices go up, that means bond prices, or as bond yields go up, bond prices go down. And so we think that you could see a little bit of pressures continue to build throughout 2021, and we could see rates potentially going a little higher. The dollar's weak, and the correlation between the S&P 500 and the dollar is that it's a peak. And the reason is that a lot of dollars are chasing emerging market stocks. We have low rates, low inflation, and the dollar is low, and so people want a good return. So they've been getting out of dollars into more equities, and it's really the takeaway there is that the market is still in a risk-on mood. It is not as scared as it was, and so we're continuing to see that rotation out of cash into stocks. And we also see that in emerging markets. Back in about the end of March, we saw a lot of money leave emerging markets and go into cash and bonds. So it was out of equity. And now we're starting to see those flows return to the international equities, U.S. equities, and fleeing the bonds. Okay. Another kind of interesting thing that's going to happen this month is Tesla is going to join the S&P 500. It's going to happen December 18th. It's going to take approximately $72 billion to purchase enough Tesla to get it into the S&P 500 at about a 2% weighting. And therefore, $72 billion of something needs to be sold to make room to bring Tesla in. And so we're expecting to see the smaller of the large companies, so the bottom end of the S&P 500, probably sell off, and we'll see some potential volatility as that change happens. It is going to be the largest rebalance ever, and so that is it's an all-time high there. Now, we do believe that Tesla's highs are most likely still to come, even though a lot of the traditional metrics evaluation show it to be overvalued. We believe if you look at a high growth company properly, that you'll see that it's still probably fairly valued. There's probably more highs to come. And, the Tesla analysts just can't even keep up with the rapid rise in adjustments and earnings, and they can't raise the price fast enough on the estimates. That will lead to some volatility again for the S&P 500. Volatility in general, however, is pretty low. It's pretty tame. The VIX is low, which is a major volatility. And so, again, that just shows that the markets are not as fearful as they have been in the first part of this year. Now, the elections are somewhat behind us. And again, we showed you some evidence earlier on that election years are okay. And so, again, November on average would be about 1.3% for an election year, 1.4 for all other years. And of course, this year we got almost 11. So the election has not been the story. It's really been the vaccine and the recovery of the world economy that's driving equities. Let's see. We also are starting to see value come into play. So you'll see that we got a little more value companies, some high earning certain companies in the dividend portfolio. You'll see that the allocation models have rotated to some favoring value over growth. So we've been taking advantage of that trend. And there's still a lot of money that's on the sideline, and we really think that's getting ready to come back into equities. You could spend it, you could put it in cash, and you could go to bonds. Well, if you spend it, we'll see some inflation, but most people have more money now than they did prior to COVID because they're worried and they're hunkering down and being prudent. So if they do invest this, where are they going to put it? You can put it at cash earning 0, you can put it at bonds earning 1, or you can put it in equities. And so most likely the flows to equities will continue, and the mood of the market will probably continue to be positive. The portfolio adjustments, again, November was a major rebalance month. You probably saw major changes in your asset allocation, your asset allocation model. Again, we reduced all cash. We did move to more value over growth. You saw, again, the dividend portfolio become a little higher quality. And in the focused growth portion of the portfolio, the focused growth equities, you saw an overweight to consumer discretionary, healthcare, and information technology. So again, we're just repositioning to try to take advantage of what the markets will give us. So we're feeling pretty good about the positioning. This has been a crazy year. We really appreciate you, and thank you for your trust. Of course, if you have any questions, give us a call. We have a whole team here ready to answer any questions. If you can't get a hold of me, there's Kevin, there's Frank, there's Ron, there's Susan, there's Mary Kate, there's Lena, there's Jason and Ryan. So lots of people here to help you if you have any questions. So we welcome your inquiries. So thank you again. I just wanted to give you a quick update, and everyone have a Merry Christmas and a Happy New Year. And we'll put another a video out if necessary between now and the end of the year, but we're looking to get one done here early January, and we'll recap everything that happened in 2020, and we'll give you our thoughts and outlooks for 2021. So the portfolios are repositioned so you can sleep tight at night and keep calm and carry on. So thank you very much, and have a great holiday season. Thank you. Bye-bye.